Hey everyone, Patrick the Property Pro here. If you've been keeping an eye on the real estate market, you've probably noticed how fast things can change. In today's video, we're going to talk about how California's real estate market is impacted by broader economic changes. We'll break down how factors like job growth, interest rates, and overall economic shifts directly affect housing demand. Let's jump right in. First up, let's talk about job growth. California's economy is massive. If it were a country, it would be the fifth largest economy in the whole world. Job growth in key industries, especially tech and entertainment hubs like Silicon Valley and Los Angeles, drives demand for housing. Think about it. When companies hire more people, especially in higher paying roles, more buyers enter the market. We saw this clearly in places like San Francisco and Orange County, where a boom in tech jobs led to skyrocketing home prices. The more people looking for homes, the tighter the inventory, and that pushes prices up. For example, in 2022, when California saw job growth rates near 4.6%, home prices surged by nearly 20% in some areas. This shows how closely housing demand and job opportunities are linked. Now let's talk about interest rates. Interest rates is a huge factor when it comes to buying power in the real estate market. When interest rates are low, borrowing money is cheaper, so more buyers can afford to enter the market. That's when we usually see increased competition for homes, driving prices up. But when rates rise, like we've seen recently with rates hovering around 6.5%, it reduces the number of buyers who can afford higher priced homes. This can cool off demand, which can either stabilize or slightly lower home prices. For example, if you can afford a $1 million home when interest rates were at 3%, higher rates like 6.5% could bring your budget down to $750,000. That's a big difference and can slow down the market if buyers hold off until rates drop. California's real estate market, like the rest of the country, moves in cycles. During economic booms, when consumers' confidence is high, job growth is strong, and people have more disposable income, demand for homes increases. But during recessions, like the one we saw during the pandemic, demand often slows down. Buyers may hold off due to uncertainty or because financing becomes tighter. The good news? California's real estate market is resilient. While prices may slow during economic downturns, the state's strong economy usually rebounds quickly, bringing demand and prices back up. So, what's happening in 2024? We're seeing a mix of economic factors at play. Job growth in California is steady, but slowing slightly compared to the last few years, especially in sectors like tech. Meanwhile, interest rates are high, around 6.5%, which is making buyers more cautious. That led to a cooling in some parts of the market, but demand remains high in areas like Orange County, San Diego, and parts of Los Angeles where job markets are still strong. We've also seen home prices in these areas remain steady or grow slightly, even as interest rates impact buying power. So, what does this mean if you're buying or selling in California right now? For buyers, it might be a good time to wait and see if interest rates drop, or explore creative financing options like adjustable rate mortgages or buy downs to make the numbers work for you. For sellers, pricing your home competitively is key. With fewer buyers able to afford homes at higher prices, you need to attract the right offers by pricing it right and showcasing your home's value. But the big picture of everything, you guys, is that California's real estate market is always evolving, especially with the economy changing so quickly. Whether you're buying, selling, or just curious about the market, it's important to stay informed and work with a pro to navigate these shifts. If you found this helpful, hit the like button, subscribe, and drop a comment below with any questions. I'll see you in the next update. Patrick the Property Pro out.